Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we come into midweek, we're seeing a lot of volatility that carried over from last week's rally. On Monday, we saw a spike into the 36 handle and then a sharp reversal and closed higher in the session, but we did see the tech markets really reverse substantially. I have been talking over the past several months that I expected to see a leadership change. We're finally getting to that point where things are starting to happen. In yesterday's action, the tech stocks continued to take a hit as the NASDAQ was down 1.4%, with the Russell up 1.8%. The S&P was up 0.1%, and there's just a very mixed picture, but there's definitely something big going on, and this is the story that I've been talking about for some time. The other thing driving this is that interest rates on the long end of the curve are starting to move higher as well as we get close to 1% on the 10-year. So there's a lot of reconfiguration that's going on in the marketplace. With the announcement on Monday with the vaccine, this has set the tone for a lot of rethinking what was going on in the economy before. As I've said many times over the past several months, if we're going to see a continued move higher in the market, we're going to need to see the small cap and mid cap start to take the lead. The economy can't make a big comeback without these intermediate and smaller companies coming back online. We definitely are seeing that happening at the moment, and this trade that I've been talking about, long the Russell and short the NASDAQ, is really starting to come alive, and I expect to see more of that as we go forward. As we come into today's action, there's virtually no economic news of any sort. There's about 117 earnings reports coming out. None of this looks to be anything material. The big day for earnings will be on Thursday, when we've got Disney and Cisco, and there's quite a few large companies reporting on Thursday. We'll also have continuing claims, and this is where market participants are likely to look forward to those numbers. And today's action is likely to be yet another muted session, just like we saw yesterday. As we look back on yesterday, the S&P did contract from its huge range that we saw on Monday, but there's still a lot of volatility in the marketplace, and I expect to see this continue for at least another 2 or 3 sessions. One of the other things that continues to happen, and I've been discussing this, is our short-term database has really come alive. We were down at 12% just about 6 sessions ago. We're now at 60% long. It has been buying with both hands. We saw yet another 1,600 new buys. I'll go through all the details here in a few minutes. But everything continues to point to higher prices. As I mentioned in last night's video, the underlying bid is continuing to be there. It did not go away because of the sharp reversal that we saw on Monday. Let's go ahead and take a look at the charts, see how they're setting up for Wednesday. As we begin covering the WaveTech database, you'll notice that there were 1,332 1.2 buys, 274 3.2 buys. The overall number was around 1,650 versus 550 sells, give us a bullish ratio, pushing the percent bullish on a short-term database up to 59.23%. Now, typically, this will stall around 62 to 68%. In 2020, however, we've actually seen this number move up to the 90 percentile range. This in itself tells you the underlying bid and that the breadth of the market is continuing to expand. Based upon this rotation that we're seeing here, the likelihood of any big major declines from this level aren't very likely. We could see a move down into some support levels, but they're not likely to be sustainable looking at the markets from how they're trading right now. I expect to see more traction if we can close higher over the next couple days, and ultimately we're still looking for that magical close above the 35.88 to signal the breakout. Before getting into the technicals tonight, I do want to cover the spread. This is long the Russell, short the NASDAQ. You'll see it is exploding out of this range. We still have some levels that need to be penetrated, but this trade is really starting to work. I'd spent a lot of time last week on a live stream discussing this trade. As I showed you in last night's video, the weekly chart is also starting to break out. This is a substantial bottoming pattern. We're likely to see a new trend evolve from this level, just like what we saw going all the way back to 2017, where the small caps have been underperforming the NASDAQ for some time. This is going to be a switch, especially on the narrative that will have the economy come back more in line, maybe because of a vaccine or whatever the scenario. But this is suggesting that these secondary and small companies are definitely going to be starting to participate more in the economy. As we look at the S&P cash, one of the things I think is interesting, and I talk a lot about this from time to time, is when you see these movements to the upside like we saw on Monday, where the market spiked up to the 36.45 level and then reversed and closed back at 35.50. It feels like some big event happened, but when you take the emotion out of the game and you just simply look at the close-only prices, all of a sudden, it doesn't look that as dramatic. All it looks like is we've been stair-stepping up. We were at 35.09 on Friday. We finished at 35.50 on Monday. And now yesterday we finished at 35.45, down just 5 handles on the session. Well, it feels very emotional when we look at that spike. It really hasn't been a material issue at the moment. We're also seeing the PPM starting to move higher. We're looking at a 0.46 number. I'll go through the futures here in a minute. You'll see an acceleration across the board on these indicators. Before moving on to the futures, you may recall last week we got this double RXT sell and the market accelerated higher. Now the last RXT sell was at the 35.10 level. We closed at 35.09 on Friday, 35.55, and then 35.45. We actually have fallen back into the grid, only at a higher level. As I mentioned, when we got those RXT sells, I'd never seen 2 in a row. So far, it hasn't really meant anything. We didn't really see the move back toward the lower end of the grid right away like we normally do. Most of this action had a lot to do with emotions around the election, and then ultimately on Monday we had the vaccine news, which caused this spike. The futures do give an interesting perspective, because we're seeing PPM1 now at a plus 0.82. We're seeing a massive acceleration to the upside. PPM2 is 0.05. It's still flat. PPM3 is above its first and second derivatives, as is the PPM 200. But this overall pattern is a consolidation. We should start to see a move higher, and we still need that breakout number on the futures at 35.76. On the cash, it's 35.88. We have not gotten that breakout number. If we do get that, I will cover these projections and we'll go back to talking about these higher projections in the pattern. But with the bullish database on a short-term level, we have the intermediate database at 55% bullish. Everything is pointing to a stable to higher market at this time. As I review the weekly S&P 500 futures, we did trade up toward the R3 number, 36.52. The high was 36.68. We went just above that and fell just short of the RXT number. We moved back toward the lower end of the range. But as I mentioned, last week's close was 3,500 on the futures. We closed yesterday at 35.42. We're trading slightly higher right now at 35.42, and the overall pattern is still positive, even though we saw that spike up to the RXT number. Now, the support levels below the market, S1 is 34.53. It certainly is possible to print down to that level, but as I mentioned in last night's video, 34.82 to 34.76 is major support. I don't see us getting below that level if there is some weakness as we come in to the next couple sessions. As we go back to the S&P daily futures, we're seeing markets trade a slightly higher, but looking at the market grid, my expectations are for an S1, 35.19. The low overnight so far has been 35.31, high 35.56. We're just shy of an R1. Most likely we'll see an R2 level today. I'm looking for an S1, R2, looking for a bit of a rebound as we come into Wednesday session. Next market I'll cover is the NASDAQ daily futures chart. We're looking at us trading just into the moving averages. I discussed this in last night's video. The 11,487 level is the key level. Yesterday we saw a low of 11,503. We held just above that 40-day moving average. In today's session so far, we've seen a low of 11,579. We're above S1. R1 is 11,715. We've had a high so far tonight, 11,698. My expectations are looking for an S1, R2 number. The possibilities are that we could trade up to R3 because we've seen such an underperformance of the NASDAQ. It may play a little catch up today. The other thing I want to discuss here is that we did have 5 sessions up, including the spike on Monday. Now we've had 2 down. Today will be the 3rd day of the pattern. We should complete this pattern and potentially start at least a 3 to 5 day up pattern. And the key pivot on the upside is going to be 11,900. If we get above 11,009, then we're going to see it start to move into the higher end of the market grid again. This will be most visible as we look at the market grid for the weekly. R1 is 12,261. We're likely to move back toward that level. If we look at last Friday's close, it was 12,075. So we're likely to see at least a move back into this range where the R1 level comes into play again. The PPMs are still very positive. PPM 2 is at a 0.75. PPM 1 is at 0.11. And we basically held the 10-week moving average in 11,431, just above that, very similar to the 40-day moving average in this pattern. It won't take much for this market to rebound to start to move this PPM back up. And if we do get a penetration of 11,900, I mentioned a minute ago, this will set the tone for some recovery in this market. I still expect to see the Russell outperform. The next market that I'll cover is the Russell. The Russell is becoming an important part of the daily commentary, so I want to make sure we talk about this trend that is unfolding here. You can see we're absolutely vertical right now. PPM 1 is at a 0.91, PPM 2 0.25, and PPM 3 is at 0.31. These are all in trend level and suggesting that the market's going to continue higher. As we look at the market grid for tomorrow, the possibilities, if we do see an S1 R2 number, we could see this move up toward the 1762 level on the upside. The pivot will be R1, which is 1748. The support is just below where we closed yesterday at 1725. I don't see an S2 printing tomorrow, especially with these type of robust numbers. And the big chart to look at here, since I have not covered this market for a while, is the weekly. As we look at the weekly chart, Russell charts, you can get a better idea. Just on this week, we have finally penetrated the old highs that were at 1698 level. The high so far this week has been 1745. We continue to close above that level. We should see an acceleration on the upside. Also, the ppm ones is 1.29. This is a weekly chart, 0.99 and 0.14, and we're seeing acceleration on these ppms. We're starting to move higher, and the entire narrative that I've been talking about to you tonight and have been discussing off and on over the last couple months is for the markets to move substantially higher, for the economy to be signaled that we're coming back online. This chart will have to lead the way. Before moving on, I do want to point out that there is some upward objectives here for the Russell to move toward the 2,069, possibility of going as high as 2,300. So these are very big numbers. This is where the Fibonacci projections are leading us, and this goes in line with what I talked about, the upward projections for the S&P. Now, we'll need to close above that 1698 level on Friday to signal this, but it does appear that we're well on our way to moving toward this breakout and confirming these prices to the upside. The final market that I will cover tonight is gold. As I mentioned in yesterday's video, I expect to see us move back toward these moving averages in the pattern. Those are currently at between 1895 and a 1903 level. We were able to print up yesterday to the 1888 level. So far overnight, we're traded a high of 1881. I expect to see us continue to move toward the 1895 to the 1900 level. The daily ppms are all trying to turn all at once. ppm 1 is at 0, but it's cutting through its first and second derivative. ppm 2 is trying to do the same. It won't take much. A close over 1900 will signal that gold is making a turnaround. That move down to the 1850 level again was yet another opportunity and a bargain price on gold. I just don't see this thing breaking down here and continues to hold these extreme levels. That support that is at the 1850 level is substantial. As we look at the weekly chart, we continue to see this thing move in this range. ppm 1 has now turned down to 0.28, which is a negative. That's at 1913. That's going to be major resistance. The conflict in the pattern right now is that the medium average, or the 21-week moving average, is at 1910, and it is rising at 0.27, but it has broken down and all the ppms are turning down. What this tells us is that we're likely to hold this 1950 level. As long as that level holds, we should see a continuation of a sideways move, and ultimately these indicators will set up and start to move higher in the pattern. We still have some higher objectives in the pattern, suggesting that the gold could move quite a bit higher. We saw what looked to be a breakout the week before last, and the emotions that came out of the stock market and everything that happened last week reversed this market, and we moved back down to 1950 support. I continue to expect to see the support hold here, and we should start to move back above the 1900 level over the next 2 sessions. This will complete the video. Thank you for watching. We'll talk to you on the live stream on Wednesday.